Okay, we're going to finish up. This will be our last handout video for whatever chapter it is we're on right now. And what we're going to talk about is we're going to look at a little bit with regard to petty cash. Okay, petty cash. So, first question, it says an exception to disbursements being made by check is acceptable when cash is paid to an owner. Well, the owner probably still wants some kind of a paper trail. To employees as wages, this is almost never okay. From petty cash and to employees as loans, well, this last one we definitely want to use a check for that. Our answer is petty cash, and that is because petty cash has its own set of internal control measures. It has a custodian for the petty cash account, and it uses a system of tickets to keep track of the cash within the account. Okay. The type of account and normal balance of petty cash is revenue credit, asset debit, liability credit, and expense debit. Well, you need to be careful here because revenues have a normal credit balance, assets have a normal debit, liabilities have a normal credit balance, and expenses have a normal debit balance. But we need to understand that petty cash is an asset with a normal debit balance. In fact, on the chart of accounts, petty cash is usually listed before cash. So definitely an asset with a normal debit balance. Okay, the debit recorded in the journal to reimburse the petty cash fund is to what? So the debit is to what? Okay, so you might think that the answer is A, because we just said that that the petty cash account has a normal debit balance. But that's not exactly the way it works. So if we have a petty cash account that has a balance of $200, even if we spend part of that money, what we're really saying for that $200 is that the petty cash account is made up of a combination of cash and receipts for normal business expenses. So petty cash is not the correct answer. Accounts receivable is kind of a silly answer here. Cash is going to be our credit, so that's wrong. Choice D, various accounts for which the petty cash was dispersed. So we could actually add the words expense here, various expense accounts for which the petty cash was dispersed, and that is our answer. Okay, entries are made to the petty cash account when making payments out of the fund, recording shortages in the fund, replenishing the petty cash fund, and establishing the fund. Okay, so this is a little bit tricky here, and what I want you to understand is that choice A, when we're making payments out of the fund, we don't have any actual entries that are being made there. We're just using the petty cash fund to pay for something. Recording shortages in the fund, we actually don't do this until it comes time to replenish the fund. But it actually is saying, entries are made specifically to the petty cash account when. So this would be wrong anyway. Replenishing the petty cash fund is also wrong. Choice D is our correct answer. The only time we're going to make an entry to actual petty cash is when we establish the fund. Next question. A $150 petty cash fund has cash of $54 and receipts of $83. The journal entry to replenish the account would include, okay, well, it's not going to have any, we're never going to do anything with petty cash, so that's wrong right off the bat. A debit to cash for $83. Well, we should know that this is wrong because we're only going to credit cash whenever we replenish a fund. So we don't even have to consider whether this $83 is the right amount. The fact that it's a debit makes it wrong. Let's see here. Debit to cash short and over for $13. Okay, well that looks like it's probably the right answer. Let's see here. Okay, a credit to cash for $54. So there will be a credit to cash, but $54 is not going to be the right amount. So receipts of $83. What we would do here, I'm going to kind of do this a little bit the wrong way just to illustrate, because I don't know what the receipts are for. So I'm just going to say that expenses are $83, okay, and that's a debit amount right there. We had 150, now we have 54, so let's take 150 minus 54, that gives us 96. So we need $96 cash to get us back to the $150. So I've got a $96 credit to cash, so I'm going to need a $13. 83 plus 13 is 96, and it is cash short over. So when we're short, it is a debit. This $13 is probably going to be debited to miscellaneous expense, at least in the short term. Okay, so this would be kind of a generic journal entry here for what we have going on here, making C our correct answer. Okay, let's finish this up. It says the last custodian of the petty cash fund was hospitalized, and you have been asked to take stock of the fund and replenish it. When you receive the fund, it has $299 in cash and receipts as follows: office supplies $295, advertising $120, transportation by taxi $75. The petty cash fund was established to have $800 in it. Based on what you have found, what journal entry should be recorded to replenish the fund? Okay, so we've got office supplies. This is an expense item for $295. We have advertising expense for $120. Some type of transportation expense, that's $75. Okay, and we're going to have to do the same thing we did before. We're supposed to have $800. We have $299 cash, so we have to see what the difference there is. 501. So we know that we're going to have a credit to cash for 501. Now what we're going to need to do is we're going to add up these debits here, 295 plus 120 plus 75 plus the 299 that we already have. And if we do that, we come up with $789. So we're short again, and we're going to have to debit the account cash short over for $11. And if we do that, let's just check our math. 295 plus 120 plus 75 plus 11 equals 501. And that's what we're going to credit cash for, $501. There it is.